Hey guys, it's Nick. Today, the Dow Jones Industrial Average fell over 600 points, making it its worst day in 2022. So, I want to talk about what is going on with the stock market, and did the market sell off today because of news about Russia, or is that just adding to a bear market already underway? I want to talk about the bear market that is already underway for many Nasdaq stocks and what the reaction to earnings reports can tell you about the health of the market. And lastly, I'm going to show you the results of the most searched stocks on Google in the last year and how they're doing right now. If that doesn't stop you from trying to catch the latest hot stock, nothing will. Let's start by just looking at the stocks that make up the Nasdaq 100 in the QQQ ETF. So this is the 100 stocks in the Nasdaq 100, the QQQ ETF, and I ranked it by how far off they are from their 52-week high. And Peloton is number one at almost 79% off of its high. And there's a whole bunch in the 70s and 60s and 50s. Let's go to the next page. There's plenty more in the 30s. Now, a bear market is considered down 20% on any index, and the NASDAQ is not there yet, but you see there are 52 stocks in the NASDAQ 100 that are down 20% or more from their all-time high, including Lam Research, which is a semiconductor stock, which is supposed to be real hot with all these semiconductor shortages. So, and there's more stocks here down 16, 13, 15. Even Google is down 13% from its 52-week high, even with the great earnings they just had and announcing a stock split. And since a picture is worth 1,000 words, just look at the charts of these things. Even Facebook, which was close to $400, is now like $207. Now, if you don't think that that is enough evidence that sentiment has changed and we are heading to a bear market, take a look at recent earnings reports. In a bull market, even bad earnings are considered not that bad, and the stock doesn't sell off or even goes higher after a few days. The opposite is true when the market is starting to turn down. All the high-flying stocks that everybody loved and had to own, no matter what the valuation, were priced to perfection. And we are now seeing that even the slightest negative is making these stocks tank. As a matter of fact, even great earnings can't keep these stock prices up. Look at Google. They had great earnings and announced a stock split. The stock jumped from about $2,750 before earnings to about $3,000. The stock is now below where it was before their great earnings. And this is going on for many companies. NVDA had good earnings, but the stock is down. Facebook had good earnings, the stock's getting killed. Shopify is tanking. And of course, all the unicorn, Cathie Wood type stocks with little or no earnings are getting killed. So guys, just remember, when the stock market party is over, trying to buy every dip is a good way to lose all your money. And speaking of losing all your money, let's have a look at the most popular stocks on Google search for the last year and see where they are now. So if you want to see what people are searching for, go to Google Trends and put in a term. And I put in the term stock. And I looked at the past 5 years. And what this does is it shows you on a percentage basis, with 100% being the highest and 25, or so being relatively much less than this level, it shows you where all the interest was during that time period. And you see, during the initial market crash during the pandemic, when it started, there was some interest here, but the biggest interest was right around February of 2021. Keep that time period, February 2021, in mind when I look over these stock charts. So now let's go just to the past 12 months. And even this is showing, relatively speaking, the most interest was in February. And now the interest is like less than half, like 43. So generally speaking, people are less interested, half as much interested in stocks as they were in February last year. But so here are the top stocks, right? The top 25 topics: Lucid, Coin, Diddy, MMAT, Roblox, Hood, Upstart, Clove, Roblox again, Wish, I don't even know what that is, Affirm, Rivian, SOS, ChargePoint, PHUN, Lucid again, AMC, Airbnb, and Ride, and OCGN, Palantir, Riot, AITX, and of course, ARC. So let's get these up on the screen and see what they look like. Okay, so here they are. There's 20 stocks in total, and let's look at the percentage off their 52-week high. And SOS is down 95%, Clove 92, 91, 86, Affirm down 78%, Riot down 77%, even Rivian down 63%. Roblox down 61%. The best performing one is Airbnb, which is only down almost 15%. So here's a look at weekly charts of these, and you'll see a good number of them had their biggest run up around the area of February 2021. Here on Ride, OCGN, Riot, ChargePoint, Lucid, ARC, Airbnb, Palantir. So that means when everybody was searching for these things on Google and the most enthusiastic about buying these stocks were generally where they peaked. And a lot of people bought very close to these high levels, and I don't know how long they held them or not or whatever, but had you held for the whole year, a great majority of these stocks are down 50, 60, 70, 80, 90% or more. This to me is the visual proof of why you should not be chasing whatever the hot stocks that you hear about from your friends or on the front page of Yahoo News or Jim Cramer talking about it on CNBC or whatever, because when you hear about it, everybody is also hearing about it, and they're probably already in, and it's probably overpriced, and most of these companies don't have very good or any earnings at all. And so the stocks eventually reflect that fact after the euphoria is gone. And you see the euphoria is gone for almost all of these stocks, and most of them are probably not coming back. So guys, this market is changing quickly. And when the FANG stocks are no longer holding up with good earnings, you know that sentiment has really changed a lot. So don't assume that if the Russian thing gets sorted out, it's back to the races. I don't know where this is going to end, but with higher interest rates on the way, we will be in a different era. I would not be trying to buy these unicorn type stocks, even if they are 80, 90% off. I would get defensive and have a list of real stocks with real earnings and wait for them to get cheap. Have patience, because there are many bear market rallies that sucker people into thinking the worst is over. Bear markets don't end with a bang. They usually end in a whimper when no one wants to own or even talk about stocks because all they do is go down. We are far from that point right now. Guys, let me know in the comments if and why you invested in any of these hot stocks that I showed. I'd be interested to hear how people actually got interested in them. Hope you liked this video, and I'll see you in the next one. Thanks for watching, guys.